Tantalus Systems is an electrical grid technology and solutions provider offering a grid modernization program, which includes its new TrueSense Gateway, which is currently being trialed and rolled out to 33 utilities. Today we've got CEO Peter Londa joining us, and he's going to discuss the company's Q1 2025 financial results. I'm Martin Gagel with Market Radius Research. It's Monday, May the 12th. Please remember this is neither recommendation nor investment advice. We're here to learn about the company. Peter, thank you very much for joining us. Looks like you had a solid quarter, which the market seemed to agree with. Why don't you do we've got a quick presentation here, just go over the high level numbers and we can dig into some of the details.
Great. Martin, thank you for having us. And for those listening and watching, thanks for allocating some additional time to get a status update on our progress through Q1 of 2025. We shared our results last week, and I'll sort of jump right to the financial profile. So we had a record quarter at Tantalus. We generated the most revenue we ever have in a Q1 period in our company's history at $11.9 million. I'd remind everybody that we report in US dollars, not Canadian, even though we're on the Toronto Stock Exchange. Our revenue profile, in addition to being a record high, represented 27% growth year over year from Q1 of 2024. Our gross profit margin remained very strong, close to 55%, and we delivered positive adjusted EBITDA of $300,000 as compared to negative $500,000 a year ago, all of which was very favorable and ahead of consensus and gets us off to a very strong start in the calendar year. To give a little bit further disaggregation of the revenue, we break that out between our connected devices that get deployed in the field and then all of our software, analytics, and services. Our software and services represented about 35% of total revenue in the quarter. The recurring revenue that we delivered in the quarter represented 26% of total revenue. Those are great barometers and metrics that we track quite aggressively, and I'd highlight, even though it's not on the slides, as of the end of March 31st, Q1, our annual recurring revenue is at an all-time high at just under $13 million on a go-forward 12-month reporting basis. As I'd referenced, gross profit margins remained very strong. And when we look at what we've accomplished over the last 12 months, Martin, you'll see all-time high for us in revenue on a trailing 12-month basis at just under $47 million, about $2.2 million of positive adjusted EBITDA. And then the net loss is really a function of a lot of non-cash related items that flow through the income statement, but very manageable from our perspective. Last but not least, in terms of some key financial elements that we shared, we ended the quarter with the strongest balance sheet in our company's history. We increased cash, both in terms of cash flow from operations of $3.2 million, as well as free cash flow of positive $2.7 million. In the aggregate, we ended the quarter with just under $21 million of liquidity, combination of our ending cash balance plus availability under our debt facility. We shared during our earnings call as well as a subsequent event in mid-second half of April, we renewed our longstanding credit facility with Comerica. The terms improved for Tantalus. The renewal and maturity date now go out 2 years to the end of June 2027. We got a reduction in our interest rate. We got some additional covenants modified to provide us with that much more flexibility. And then we subsequently paid down the outstanding balance of the Comerica debt with cash that we had on hand on the balance sheet. So we reduced our debt facilities by about $3.7 million towards the end of April, but maintained still over almost $21 million in liquidity between cash and available borrowings from a working capital perspective to support the operations of the business. So overall, Martin, a great end to Q1 and a great start for 2025.
All right. Just since we're on the slide, the Comerica, you paid it off, but you haven't closed that. That's still a line of liquidity that is available to you?
Correct. So we have two loans in our balance sheet, one of which is the Comerica line of credit. It's a revolver that is $8.5 million. It is fully available to us, even though the current balance is $0. Good way for us to offset some interest expense in the near term with the cash position that we have. But relative to the borrowing base calculations and covenants, we have full access to that $8.5 million as of today, and we anticipate having continued full access to that loan to draw down as needed for working capital through the balance of 2025. The maturity is 2027. So we've got a good 2 years line of sight of being able to access that cash to the extent we need it.
All right. Well, okay. You've got the balance sheet seems in good start. Let's start with some of the top line numbers to dig down into those on the revenues. You had strong revenue growth and strong margin growth. Could you put up the slide where you've got the different segmented revenues?
Yeah,
I believe
sure,
that's the next one there.
sure.
Yeah. So the just to clarify, your revenues add up by adding your connected and your software and services that and then adding the recurring revenues on top of that. Those three segments make up the full revenues.
What we do is we disaggregate. I'm going to use the mouse.
Yeah.
$7.8 million of connected devices
Yeah.
plus $4.1 million of software and services. That's what makes up $11.9 million.
Okay.
Of the 11.1 million, or excuse me, 11.9 million, 3.1 million is recurring revenue. So another way to extrapolate that is about 75% of software and services is
Okay.
recurring.
Yeah.
26% of total revenue is recurring.
Gotcha. And is that mostly in the software and services where that recurring revenues comes in, or is that split out, is sort of balanced out, some in the connected devices as well?
No, it's 100% from software,
Okay.
um, analytics, our software licenses, as well as maintenance on software licenses, analytics, which we offer now through SaaS offering. We have some hosted services for utilities that have looked to us to and outsource their IT hosting. And then we've got annual technical support agreements that are renewing every year under our master service agreement with the utility.
Gotcha. Your margins did very well, including on the connected devices. Is that should we expect to see continuing growing margins, or is this some variability and bouncing around in it? What is the, I don't know if you can give specifically, or what is the general range of margins investors should be
Sure.
expecting?
So our long-term internal target for gross profit margin and what we model around is 50%.
Okay.
So we're a good bit north of that or above that internal threshold. The connected devices in Q1 that were strong year over year, it fluctuates quarter to quarter. It's a combination of the product mix that's shipped. So example, in a quarter where we may see a higher concentration of connected devices that are for commercial and industrial locations on the metering side versus residential, higher gross profit margin for us. Sometimes a little bit more on the networking communications infrastructure, slightly higher gross profit margin. So a lot of it ties to mix. We would think that I'd say our connected devices gross profit margin can fluctuate between the upper 30s to the low mid 40s. No, I don't think 44% is the new base level to then scale above. I think it's just it was a function of mix within the quarter, and we would expect that to normalize back to where we've seen historical numbers for some period of time.
All right. Your revenues grew nicely especially on the connected devices size. You're in the midst of launching the TrueSense gateway, getting the trials out there. Is a lot of that change or that growth in revenues from the TrueSense gateway, or you didn't give any specific data, I believe, in your financials? Can you give some color into what was driving that connected devices increase?
Sure. So last year, we shared that 2024 marked the highest threshold of orders that we ever converted out of our pipeline, over $50 million, and the largest number of utilities that we'd ever converted in a calendar year at 31. So the strong growth in revenue in connected devices starting in Q1, it's really tied to the increased number of utilities that are leveraging our edge computing devices, particularly where we are putting intelligence inside meters and all of the infrastructure to support our grid modernization efforts for the utility. And then the expansion of deployments with our existing customer base. I think our CFO, Azim Lalani, had shared that about 85% of total revenue in the quarter came from customers that we've had for some time. Captured accounts is the way we refer to them. So not utilities that are just activating deployments for the first time with us. It gives us a great line of sight and visibility into our revenue profile moving forward as we continue to add new utilities to our user community. To your question on the TrueSense Gateway, Martin, we have not seen significant revenue contributions yet from the TrueSense Gateway. We are generating revenue from it, but that is not what's driving the growth in Q1. Our expectation is the TrueSense Gateway really starts to contribute revenue growth in the second half of this year, 2025, and into 2026 and beyond. We were really pleased and at your opening to share that we now have 33 utilities that have placed orders for the TrueSense Gateway to activate field trials and their pilots, as well as initial phases of deployments. If I just jump to a different slide here, yeah, so within, and this is all part of our investor deck that's now on our website for investors that may have missed our earnings call, but you'll see in the bottom right-hand side, those 33 utilities translate into roughly, I think we shared about 150,000 connected devices. And in the aggregate between TrueSense gateways and other connected devices, software, analytics, and services represent almost $100 million of opportunity for us out of the $500 million that we've been chasing. So we're making good progress in getting a large number of utilities to start to activate the initial trials and deployments of the TrueSense Gateway. And as we make progress with those utilities, we are improving our line of sight to some very significant revenue growth for the company moving forward.
When companies want to roll out the TrueSense Gateway, does that trigger sort of preparatory revenues from you where they need to upgrade some of their other Tantalus systems so the data analysis is there and that? And could that be driving some of the current connected devices revenues and that their software and services so that they're preparing to accommodate this rollout of the TrueSense?
Yeah, so for existing customers, we had shared about 75% of the 33 utilities are existing customers of utility. The balance are utilities that had never purchased anything from Tantalus before that are selecting us because of the TrueSense Gateway, and that's what they're focusing on, which is a good mix. It's great to see our existing customer base really start to embrace this technology. When we think about revenue growth and visibility, it's a lot more predictable when we're dealing with existing customers that are looking to add to an existing deployment and increase their rate or their return on investment that they've already made with us. Just the sales cycle is a lot different and much more predictable and frankly quicker. To that extent, Martin, it depends. Some utilities that are deployed our latest technology, there's not much more they need to do to prepare. We can deploy the TrueSense Gateway, either fiber, Ethernet, or cellular, activate that and start bringing data across their network, and to populate that into a variety of different analytics tools that most utilities are then launching incrementally to the TrueSense Gateway. So just to give you some visual of that, we've chatted a lot about United Illuminating as an example in the state of Connecticut as an investor-owned utility. They've never purchased anything from Tantalus prior to this effort. They are deploying the TrueSense Cellular Gateway. They don't have fiber. That cellular gateway is then connecting inside the home to a standard electric circuit breaker that we have partnered with Savant. That's these smart, intelligent circuit breakers that can plug right into an existing board without having to rip and replace the board. From there, we're connecting to our partner GE Appliances water heaters to help the utility preheat water and turn that water heater into thermal storage. So in advance of peak demand, advance of higher rates, advance of a storm. The connection to this device also for United Illuminating and other utilities, as an example, is then rolling out a suite of analytics tools. So we're pulling data, let me go back, to really track and protect the transformers, these pull-top transformers that are on the left side of this slide. And so what does it look like to protect a transformer? We're capturing power quality data at the TrueSense Gateway. That power quality data is a direct correlation to the performance of that transformer. Is it overloaded? Is it underloaded? Is it stressing and starting to arc? Is it leading to millisecond disruptions in voltage, current, and other parameters that could impact utilities, that could impact power quality, that could impact outages? And so we see a lot of pull through, obviously, with the TrueSense Gateway. Then from data, from the data that we capture from that TrueSense Gateway into our software and analytics. So not necessarily directly correlated. The growth is just the growth, Martin. We're just making more progress with an increasing number of utilities, and the financial profile and revenue growth is a correlation to that.
So, and you're expecting the benefit of the TrueSense on the revenue line to start being material in the second half of this year. You've
Correct.
sent out a lot of the TrueSense gateways already, and that's more on a trial basis, correct? But it's not large enough to have a meaningful impact on revenues to this date.
That's correct.
All right. And okay, so you're going to be getting that sales push through then in the second half, which will be largely incremental to your baseline of business from the connected devices. I believe you're in your expense statement, your sales and marketing expenses are creeping up, which makes sense as you're trying to push the roll up. Out of your expense lines, is that the area where we're going to see the biggest increase in expenses that kind of correlate with revenues as you try to push out all these products and build relationships?
Yeah, so as investors disaggregate the financials, we don't have a summary slide for you that breaks out the operating expenses, but obviously that's included in detail in the financials, as well as our MD&A that we file as part of our quarterly filings. The bulk of increase in OpEx is tied to sales and marketing. That's been offset materially by a reduction in the R&D effort that was underway last year, a year ago, to get the TrueSense Gateway fully commercial. And so while we have not reduced our R&D team or our engineers, as the TrueSense Gateway is now fully certified and into production, external costs, certifications, other types of expenses have started to dissipate. Within our OpEx and sales and marketing, to your question, Martin, we have increased our allocation of dollars, both in terms of headcount, activating some new roles inside Tantalus in the form of business development to really get to as many utilities and build awareness. And we've also increased trade show activity and marketing activity to try to get in front of as many utilities as quickly as possible.
In your commentary on the quarter, you converted almost 20 million from sales pipeline to orders. Did I get that number right?
Yeah, yep.
your quarterly revenues, especially on the connected devices, were not $20 million. Does that mean you've received orders, you're fulfilling them, and then once they get shipped out or delivered to the client, that's when they turn into revenues? I'm just curious because your conversion rate is so much larger than your actual revenue. Is that I guess that maybe the delta between those two, should that be some indication of revenues for Q2 or Q3 coming forward?
So it depends. So our orders are converted out of a pipeline in the quarter. Last year, as an example, $51 million for the entire year. In Q1 of this year, we converted just over, $20 million of orders. So we look at that in the context of a book-to-bill, Martin. So we generated, just for rounding purposes, $12 million of revenue, $20 million in orders. That means our backlog grew by $8 million. The orders, some portion of it can convert immediately into revenue within the quarter. It's rare. Typically, orders that we receive in one quarter translate into revenue over forward quarters or future quarters. It really is a function of, does the order come from an existing customer that is enhancing or expanding capabilities and looking for additional connected devices or the activation of analytics, versus a new utility like Reading, Massachusetts, which we announced in the quarter. They've given us a full order to upgrade their system and get them on their grid modernization journey. That's a multi-million-dollar order that will get deployed over a 2-year period. So it really varies based on where that number comes from. We do not disaggregate it more than we do in the aggregate dollars of orders converted in the quarter. It's the second highest amount of orders we have ever converted in a 1 quarter, 3-month period in our company's history. So again, another good barometer of our position, the scale, and some of the new technology taking hold.
It can't be a current interview with the CEO if I don't talk about tariffs, and that they do impact you out of, I believe you're manufacturing many things out of the Philippines, 10% tariff on there, and you're kind of splitting up the tariff burden on yourselves and half on yourselves and half on your clients. Can you clarify your strategy there?
Sure. And it never ceases to amaze. It seems every day there is yet another change, as there was this morning out of Washington, D.C., based on discussions with China over the weekend. That our products, our devices today are built in the Philippines. Those connected devices today are subject to a 10% import tariff as they come into the United States. That's the 10% tariff that has been applied to pretty much every good coming into the U.S. by the Trump administration as it sits today. Unlike some of the vendors in our space, while it's a challenge for us to navigate through as a small company, we see it also as an opportunity to distinguish ourselves. And so our approach to the current tariffs at 10% is to share in that burden with our customers as we focus on really nurturing and supporting long-term relationships. And we have utilities that have been working with us for decades. And so from our perspective, helping offset some of that expense, obviously it has a near-term impact to our gross profit margin, or I'd say overall profitability. What we've decided to do as of now is to absorb up to 5% of the tariffs on products coming into the country. So it is 50% of the aggregate tariff. If the tariffs, example, go up under the reciprocal tariff concept, the Philippines is subject to, or could be subject to, a 17% tariff. We're not taking 50% of that. We're going to max out at 5% of the tariffs to try to offset some of the expense to help the utilities that we partner with today. And we think that's the prudent thing to do. Fortunately, our balance sheet supports it. The improving profitability supports it. And we want to do everything possible not to mitigate orders coming from the utilities that are within our user community and in our pipeline today.
I'm just going through my notes. I think we've covered all the main topics here. Is there anything we haven't covered that you'd like to highlight, or any sort of conclusionary comments to make before we wrap it up?
Yeah, two items there, Martin. So, and thank you for the question. We also shared as subsequent events for investors that have been tracking us uh, through the months. In Q1, we added two senior executives to our team, Azim Lalani as CFO and Chris Allen as our Chief Operating Officer and Executive Vice President of Solution Strategy. Both of these individuals are unbelievably accomplished professionals. Azim was most recently CFO at Auto Canada, and for the last 25, 30 years has supported both public and private companies, NASDAQ and Toronto Stock Exchange. A wealth of knowledge as it relates to process, system, and governance, which is a great incremental expertise to bring to our financial organization. Chris Allen was most recently in a joint capacity as CFO and COO at Copperleaf Software. He was instrumental in both taking Copperleaf Software public on the Toronto Stock Exchange, as well as orchestrating the strategic trade sale of that business to IFS in August of last year for over $1 billion. So to add that type of bench strength to our executive leadership team, I think is an indication of the opportunity that's in front of Tantalus. It's a humbling experience for me as CEO to bring in that type of skill set and background to enhance our organization. We're very fortunate to have both of them. And then I'd say, just lastly, we're seeing an interesting dynamic unfold as events that most recently hit the news out of Spain and Portugal with countrywide power outages, the London Heathrow airport going down because of a transformer failure. The grid is fragile. And even though we don't play necessarily in Europe, a lot of our technology and a lot of our systems that we are bringing into the industry today are directly tied to mitigating that type of exposure for utilities through the distribution grid. So we think we're very fortunate to be in the right place at the right time, and very pleased to see the progress we're making with the TrueSense Gateway, which is really what's going to anchor our grid modernization journey for utilities moving forward.
All right, excellent. Peter, that was a great update on the quarter, and congrats on a very solid quarter there. Great talking to you. Have a great day, and I hope we get do some updates again in the future as the business progresses.
I appreciate it, Martin. Thanks for having us.
Cheers.